Let me ask you something. What if I told you that with just £100 you could start building wealth today? No jargon, no gatekeeping, just real steps anyone can take. Whether you're a student, a parent, full-time employed, or working part-time, young or old, if you are tired of watching your money sit still, this video is your launchpad. I'm the Smart Money Sister, and today I'm showing you how to invest from scratch with just £100. Let's flip the script on what it means to be an investor. Ready? Let's go. Okay, so here we are on Trading 212. Today we're talking about setting up our own portfolio with our first £100. Please remember that this isn't financial advice. It's just what I would do if I was starting again. Please do your own research and remember that your capital is at risk. We're going to set up our own, in which I practice what I preach. If this was my first investment, and I was doing it right, because my first investment, like most people's, was a bit of a mess, I would look at an all-world index tracker. The reason I would go for an all-world is the diversification that comes with it, and we'll go into that in a second. If you put an FTS at the top, up will come some matching options. The option I tend to use on some of my portfolios is the Invesco All-World. Invesco is the company that owns this ETF, and Invesco is slightly cheaper. However, the reason we're not going to use Invesco for this one, and we're going to use Vanguard instead, is because Vanguard gives a few more details which will be better for you as a viewer to watch. The ticker symbol for this ETF is VWRP, which is the Vanguard FTSE All-World ACC. ACC stands for accumulating, which means when a dividend is paid out from the ETF, it will be invested straight back into the account, adding to the growth of the investment. Whereas with the other options, the dividend can be paid out directly to you. This is called distributing. Because we're based in the UK, I've picked an ETF that is listed in Great British Pounds. You can buy it in US dollars, euros, or Swiss francs, and they will be listed on different stock exchanges but track the same thing. In the last year, this ETF has returned 15.29% growth, which is very good, and especially because Trump and his tariffs are responsible for the big dip in the middle. It shows you the performance over the last 1, 3, and 5 years. It has recorded between 13 and 16% growth, which is fantastic. This is by no means a guarantee of future returns. It's just reporting on what has been achieved. In this ETF are many different holdings, and it shows you here the largest 10. A holding is just another way to say a company or equity, and it shows the percentage of the ETF attributed to that holding. In total, there are about 3,500 different companies held in it. In the top 10, there are many companies that you're likely to have heard of. There is Microsoft, Apple, Amazon, companies that most of us use on a daily basis. Alphabet, which owns Google, and Meta, which owns Facebook. And at the bottom, there is Tesla, which some of you may even own. At the top is Nvidia. Now, some people might not have heard of Nvidia. They make microchips, especially the ones that are used in AI, and are the first company in history to have a market cap or worth of $4 trillion, which is why they are at the top. The ETF's holdings are weighted according to the relative market worth of each company. The bigger the company, the higher the percentage of the ETF they hold. For example, if I put £100 in, then £6.39 will be invested into Nvidia stocks, £3.54 will go into Apple stocks, and £2.46 into Amazon, and so on. The beauty is that you don't have to pick which one of these big companies is your favorite, or which is going to do the best, because you'll have exposure to all of them. At the bottom there is Berkshire Hathaway, that's Warren Buffett's company, the greatest investor of all time. And every time I invest in this ETF, 1% of the money I put in will buy a small slice of his company automatically. If you are enjoying this video, then help us reach others by letting us know your thoughts in the comments. Whilst you are there, please give the video a like and subscribe to the channel. It will really help us grow and be able to share our content with more people. Thanks so much. As I expand the view, we can see all the different companies that are held in the ETF. As we scroll down, you're going to see ones you know, such as Visa, Netflix, or Coca-Cola. There are companies like IBM, which you might have forgotten exist, but they are still around. Nestlé, who are a global food and drink company, famous in the UK for instant coffee. If we scroll right down, you're going to see Pfizer. That is a company that produced one of the vaccines that was used against COVID. And what it shows you is that in the last year, Pfizer went down 19.29%. So despite the ETF being up, this stock is down. Another one is Shopify, and in the last year it is 172% up. You might ask, why not just buy Shopify? Well, the reason for that is because I didn't know last year that Shopify was going to be up that much, because in the whole time it's been listed, it's only been up 143%, but last year was massive at 172%. Having this ETF gives you the ability to not have to know what each stock is doing, but just to be able to have a little bit of a cover on everything major in the global market. Rolls-Royce, another company within the UK markets, and this year it's up 130%. But I don't think a lot of people would have predicted it, especially people like us for who trading isn't a full-time job. So as I go down, you may notice that each company has a smaller and smaller percentage, but you still own very small and significant amounts of companies you're going to know, like Nike. But there's also companies in here that you probably don't know. Now forgive me, but I don't know what TransDime do, but this will tell you what they are. And again, you get exposure to them through this ETF. That means with these companies, you don't have to go off and research all of them, but you can trust in the ETF or market as a whole. As well as the companies, it's also possible to look at the representation of the sectors or industries within the ETF. Within this ETF, the distribution is nearly 30% technology, 16% in financials, 13% in consumer services, 8% in healthcare, and so on. Being so heavily weighted in technology won't surprise you, because that 30% is made up of the big tech stocks we talked about. That's going to be Apple, Microsoft, Google, and Meta, which, as we saw, are all large investments within the fund. Finally, you can also look at the geographical split by countries. This aligns with what we just saw and is heavily weighted to the United States, because those companies we talked about are all predominantly based in the US. The United Kingdom makes up just 3.45%. That's less than Apple on its own. And as a British investor, I want to try and put a bit more of my money in our country. That's why I've decided to include a second ETF within the portfolio. This one will track the FTSE 100 index, which follows the 100 largest companies listed in the UK. Doing this also takes a little bit of the overall weighting out of the US, just in case things do get a bit bumpy over there at any point. This Vanguard FTSE 100 ETF is similarly laid out to the All-World Fund we just looked at, with all the same sort of details. And it tells you the companies that are listed. At the top is the bank HSBC at 7.5%, then the oil and gas company Shell. They are followed by AstraZeneca, our biggest pharmaceutical company, and then Rolls-Royce, who we just spoke about. A lot, if not all of these 100 companies will be in the All-World Fund, but by adding this, I'm increasing my allocation to the UK that little bit more. The reason I choose to do this is because I actually believe in the UK market in the long term. I live in the UK, and if I want the country to have a strong future, then I feel it's better to up my investment in where I call home. But again, that is a personal choice of mine and not investment advice. As there are only 100 companies in this ETF, compared to the thousands in all world, I also get a bigger percentage allocation of each company contained in it. With both ETFs, the companies that don't do very well will fall out of the index and be replaced with upcoming replacements. This means that the index applies a survival of the fittest approach, which is good for the people who invest in it. I still want most of my money in the all world because I want to capture the broad market, so I will allocate 90% of my funds to that part, with the last 10% going in the FTSE 100. I've already prepared the money in my account, and I'm going to put in £100. But if you decide to do something similar, you can start with less or more depending on your current situation. The most important thing is to just start. So all that's left is to name the pie. Let's call it the Smart Money Sister, and then we are ready to go. I'm recording this on the weekend, so the London Stock Exchange is closed until Monday morning, but the account is set up and ready once it does. To confirm that everything had worked, I checked the account 5 minutes after the market opened on Monday, and with a lucky twist of fate, the portfolio had jumped over 2% straight away. I'm not going to get overexcited though, as it's just as common for it to fall later the same day. What you may have noticed is that despite the initial jump, the account is only 1 pence above the £100 I invested. This is because of a small fee that was applied, and the purchase was rounded down and didn't quite fill the full £100. This left me with a tiny amount held as cash on my account. So, there we go. That's the first investment done. The plan is to update you every month with how the fund is progressing and what may have affected it over the last month. Whilst this isn't investment advice, and I do urge you to do your own research, it would be great if anyone who feels more confident in setting up their own investments, let me know in the comments. If you have enjoyed this, then please do like the video and subscribe to make sure you don't miss future updates. Thanks so much, I'll see you in the next one.